Ladies and gentlemen, good day and welcome to 3Q FY23 results conference call of Prudent Corporate Advisory Services Limited, hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan Mandora from Equirus Securities. Thank you, and over to you, sir.
Thank you, Nito. Good afternoon, everyone. Welcome to the Q3 FY23 earnings call of Prudent Corporate Advisory Services Limited to discuss the quarterly performance. To give a brief update and address investor queries, we have with us from the management, Mr. Sanjay Shah, Chairman and MD, Mr. Shirish Patel, CEO and Whole-Time Director, Mr. Chirag Shah, Whole-Time Director, Mr. Chirag Kothari, CFO, and Mr. Parth Parekh, Investor Relations. We will begin with a brief management commentary followed by Q&A. Thank you, and over to you, Mr. Shah.
Thank you, Rohan. Thank you, and good afternoon to everybody. Let me first of all welcome you all to the earnings call of Prudent Corporate Advisory Services Limited for the third quarter of fiscal 2023. So I thank you all for sparing a valuable time to join us today. The fiscal which has been ended has been very, very special for us as we crossed the landmark of 50,000 crore of assets under management. Also, as per the AMFI ranking based on the commission on which AMFI publishes at the end of every year for the FY22, we jumped our position by one notch in the ranking to become country's second largest non-bank mutual fund distributors. So that has been very, very satisfactory for us. So all these efforts were reflected in the quarter's number, wherein we recorded the highest revenue and the profit. I hope you have the investor presentation in front of you and handy, so which we already uploaded on the exchange yesterday. So as we will be giving the reference to these slides while I'll talk about this quarter's number. So let me start with our AUM, which is the very important parameters of our business for this quarter. So if you, I'll just take you all of you to go to slide number 36. So if you see slide 36 of the presentation, despite having Karvi in the base quarter, as you all aware that we acquired Karvi and the entire assets of Karvi were transferred in our code in 28th of November 2021. So in spite of there being Karvi in our code in October, November, December of last year, our closing AUM has grew by a healthy pace of 17% YOY to 56,138 crore from 48,197 crore in December 2021. Further, our quarterly average AUM grew by almost 32%, which is much higher than the closing AUM. This has been mainly because in Q3 of current year, the Karvi's impact was there for the entire 3 months, while it was only for a 1 month in last quarter. Also, as you see in slide in fiscal 2023, we are currently running at an average AUM which is almost 39% higher than the FY22's full year average AUM. Thus, we are expecting that we will close FY23 with a very robust growth in top line as well as in the bottom line. So now I'll take you to move to slide 37. If you see slide 37, we have given you the variable which move the equity AUM on a year-on-year basis and a sequential basis. So equity AUM has grown by 18% year-on-year, and mainly it has been due to a decent growth in net sales thanks to our SIP flows. Net equity sales during 9 months FY23 has been 3,520 crore, and we are in line with our guidance to achieve a net sales of 5,000 crore during the entire year. On a sequential basis also, if you look at equity AUM grew by almost 6%, aided by mark-to-market movement in last quarter. However, if you look at the full year mark-to-market movement, it has been little bit muted, because on a full year basis, mark-to-market benefit which accrued to our AUM was only about 5.3%, which is also in line with if you look at full year earning of NSE 500 stocks or NSE or probably Sensex. Sensex gave close to about 5% return. I'll take you to slide number 38. So if you move to that slide, I would like to point out that despite all the noise around fintechs, our market share in equity AUM without ETF has remained stable at 2.4%. On the monthly equity SIP flow for the December, which was very, very strong for us, and it was at 478 crore. If you compare the same number 1 year before in December 21, it was 371 crore. So we grew our SIP book by almost 29% on a year-on-year basis, which gives you a very strong traction and visibility for the inflow. And we expect that this book will definitely close at 500 crore plus within this fiscal itself. The SIP mobilized during the quarter was also at a historical high of 1411 crore. And every second rupee which we had that has mobilized in the gross flow has came from SIP. So that shows that how granular our business is, and that shows the reality of our AUM also. SIP will continue to be will play a very pivotal role in our growth going ahead. I'll take you to slide number 39, which is basically we want to emphasize our emerging business segment insurance. It forms around 8% of our revenue in this quarter. This vertical grew at 52% year on year, and 80% of this vertical's revenue during the quarter came from life insurance and the rest from general insurance. Our point of sales persons POSP network is a strong 7,524, and we are relying on this channel to bring scale to our business. I'll take you to now slide number 40, which is the summary of our consolidated earnings of Q3. It contains the details of consolidated number. So revenue from operations grew by 35% year on year in first 9 months, led by solid growth in quarterly AUM, aided by the acquisition of Carvin last year, as well as change in mix towards higher yielding equity AUM. Our operating profit grew by 41%, which was higher than the revenue growth, led by operating leverage. Our operating margin has expanded by 109 basis points to 26.4%. If you look at our profit after tax, it has grown at a tad slower than the operating profit growth, which was at 31%, mainly because of the higher depreciation and the lower other income. Depreciation expense doubled, led by the amortization of Carvin assets. As you are aware that when we acquired Carvin, we paid 151 crore for that, and we are going to amortize that amount over a period of 10 years, and that's a non-cash expenditure on the balance sheet. So similarly, other income has also reduced, mainly because company utilized surplus liquidity of 151 crore for acquiring Carvin assets. If you look at our annualized return on equity in first 9 months, it stood at a very healthy rate of 40%. So this is broadly about the numbers which we have given, and it's a part of our presentation. I'll just try to briefly touch base on our growth outlook. So let me just tell you that there are a couple of drivers which are very, very strong and very steady for our retail wealth management business. And number one of our growth driver would be the continuation of addition of mutual fund distributors in our kitty. So as a business strategy, we are focusing aggressively on adding more and more mutual fund distributors, which are the backbone of our business. And as of March 2022, Prudent was having a 20.4% of overall mutual fund distributors of the country empaneled with us as a business partner. In 9 months of current year, which is 9 months FY23, we have added around 3,360 new mutual fund distributors. So there is an increasing need for mutual fund distributors to collaborate with a tech-based platform to service their clients, and we are capitalizing on this opportunity. We had a target of adding close to 5,000 people in the current year, and I'm sure we'll be able to at least reach to that number closely. As more and more mutual fund distributors join the industries, we expect that incremental benefit will accrue to our company, which is Prudent Corporate. Second number, which is our growth driver, would be the cross-selling of other products using our strong network of mutual fund distributors. So ours is now, we are moving from a single product distributors to a multi-product distribution platform, which has helped us to capitalize on our vast mutual fund distribution network. Our multi-product platform has also created a great value proposition for our mutual fund distributors who has joined us. So far, company has converted 7,524 existing distributors and their family members to point of sales persons who can also sell insurance products through our group company, GenNext Insurance. So third number for our growth outlook would be the strong SIP book, which we always encourage our mutual fund distributors and educate them to build for the purpose of granular flows. So ours is a very unique B2B2C platform positioning in the retail wealth management segment, and it helped us to build the granular flows through SIPs. Our monthly equity SIP flow for the month of December was 478 crore, and we are and almost a second rupee of our equity new flow in last quarter came through SIP. So we believe SIP is a very robust organic growth lever for us going forward. And finally, number 4 will be the effective utilization of cash flows for inorganic acquisition, which is the another critical strategy for us. We generate significant cash flow from the operations, and we are always on the lookout if something lucrative comes on our way. We generate the significant healthy cash flow also, and if you look at 9 months of this year, the profit before tax, and if you add the depreciation to that, significant amount of cash being generated by the organization. During this quarter, we also acquired the all mutual fund assets of iFAST. So in October, we merged the 517 crore of iFAST mutual fund assets, and we paid 2.56 crore for acquiring these assets. So overall, these are the growth drivers which I look at from the point of view of Prudent. However, let me just tell you that overall on the industry front also, we are very, very comfortable, and we feel that the entire wealth management industry is poised for significant growth. I was referring to one institutional desk research report on the mutual fund industry, and they are having a view that active equity assets of mutual fund industry will grow by, in next 10 years, will grow from 19 trillion, which is currently about 20 lakh crore to 77 lakh crore by FY32. So we are talking about next 9 to 10 years, representing a CAGR growth of 15%. If you look at historical growth of Prudent, where Prudent grew almost double than the industry's growth, so I am sure I think we'll be able to ride on this wave which is going to be there as far as retail wealth management is concerned, and we are immensely going to be benefited by this trend. If you look at the US as a country, US witnessed a rapid rise in retail mutual fund investing from 1980 to 2000, wherein the share of household owning mutual fund increased from 6% in 1980 to 45 to 46% in 2000. I think we'll go through a similar trajectory in the next decade, and we are looking at the next decade as extremely positive for the industry as well as for us. So with this, I'll just end my discussion, and I'll open the floor for the Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. First question is from the line of Swarnam Mukherjee from B&K Securities. Please go ahead.
Yeah, thank you for the opportunity, sir, and congrats for a good set of numbers. So a couple of questions. One on the iFAST acquisition. So if you could talk a little bit about how the yields of that business is, because when I see you, after consolidation, there is no discernible impact that we can see on the mutual fund business yields post this. So if you could talk about that, what would be what could be any kind of impact that you would see going ahead, and also in terms of the distribution partners of iFAST, what are we doing to ensure their stickiness, or is there a risk there that they may move out of the system there? That would be my first question, sir.
So if you look at iFAST, probably you will not see a significant change in the revenue, because iFAST is less than 1% of my AUM. So if you look at end of December, our total AUM was 56,000 crore, and what we acquired from iFAST was hardly about 417 crore, and then assets got merged by the end of October. So November and December, these are 2 months where revenue has been so the asset has been merged and revenue has been booked. There is no separate reporting for iFAST, but I can just give you a rough number. I think we are are going to make additionally about 11-12 lakh rupees by way of this acquisition. So it's going to be very, very remunerative for us because we paid 2.56 crore for acquiring iFast, and I believe payback period would be less than probably 2.5 or 3 years. So we'll be able to recover whatever we have paid for acquiring the iFast assets. So that was number one. But however, it being 11-12 lakh rupees a month, so you will not see a significant change in the revenue overnight. Number two, iFast was significantly like Karvi, also a business model driven by B2B. And there were a couple of partners who were working with iFast, were also working with Prudent. So all in all, we got about some 250 odd partners who were new to us, and they all have empaneled us. There might be few people who might be still in the process of empaneling. However, I believe as far as the positioning of Prudent in B2B segment is concerned, I think we have a very strong deliverables and value proposition for them. So anybody who will come from another platform to us would be more comfortable to work with us. So we believe we'll be able to take care of them, and I haven't seen any slippages. And slippage is in the form of whether he'll continue to work for the additional business or not, but the business which we acquired and is a part of our AUM will definitely remain with us only.
Okay, got it. Now, coming to the insurance side of the business, sir, if you could give me some color on how are the commission shared between us and the distributors, and is there a possibility that since we would be having a higher scale, can we get a better commission structure out of the insurance companies? And again the same question on the stickiness of the agents, that since in insurance the upfront is significantly higher than what would be the trail income on the renewal of the policy, could there going ahead be risk of an agent getting empaneled separately with the insurance company, or can they by regulation at all, if they move out as an agent of an insurance company, can they still function as a POSP? If you could highlight that.
Sirish, you would love to address?
Yep. So I give the answer of last question that the agent who becomes the POSP has to work only with one particular broker. So the chances of leakage of the POSP is much lesser. In case if he wants to move out of GenNext system, obviously they need the NOC from GenNext, and then we can get registered with some other insurance broker. So if hypothetically there is a possibility of people going out, there is a higher possibility of people coming in, because currently we have hardly 7,000 odd POSP, and I think many other competitors would be having much higher number in terms of POSP. Second, why we believe that the attrition would be lower, because our focus of recruiting POSP is not the broader market, but mainly our focus is to cross-sell to our existing mutual fund distributors. So they don't have only the insurance relationship with us, they ideally deal with multiple products with us, and that is the reason the attrition level could be much lower compared to other brokers. So that is why I said, I think the chances of people coming in could be higher than the chances of people moving out. So that is the last point. The second question, what you asked is there a possibility of our gross yield moving up since our business is increasing? I believe that, yes, I think the insurance industry is very dynamic with the volume increasing. There could be a possibility of increasing the gross yield. But in last 3-4 years, the kind of growth what we have shown, obviously we believe that we are almost near to our peak negotiation. So we don't see that the gross yield improvement can be great going forward. Yeah, there could be, I think, 1 or 2% improvement possible, but otherwise we don't see a great improvement in the gross yield. So that would be our second point. Coming to your first question, the sharing, I think the sharing ratio continues is a similar level what it used to be earlier. So again, I think it's a very dynamic thing. I would say it's a volume link. So lower the volume of a distributor, lower the sharing, and higher the volume of the POSP, higher the sharing. So sometimes it may depend on the composition of the business, which is delivered by the few people delivering more business and more people delivering lesser business. So like in mutual funds, we have got a tiered structure. Similarly, we have got, I won't say exactly the tiered structure, but higher the volume, higher the sharing kind of structure we have. But we have not seen any change in the sharing mix in last few quarters. So that continues the same.
So in an average, sir, if you, what would be the mechanism? Because, say, let's assume that, last call, I think you mentioned that the largest portion of your business is coming from non-par. So assuming that, a commission that an insurance company is giving, say, somewhere around 30% or so on the first year premium, in an average, how much would a partner get?
So ultimately, I think different products mix, if I talk about on an average, the roughly sharing would be around 65 to 70%. But again, there is not a product specific. I think we look at so many parameters. It is not only the product, it is also the PPT, as I said, the volume of a person. So but average you can call about as a 65-70% on an average.
Okay. And sir, the ticket size for insurance that you have mentioned in the presentation, average ticket size, I think around 33 or 35,000. So in LI, particularly, ticket sizes can go up significantly. What would be the kind of steps that we are taking to improve productivity of our POSP? If you can give some qualitative commentary on that.
So here I would say two things. One, the productivity, and second is the quantity of the POSP. As we already shared that the number of ARN holders with us is around 26,000. Out of that, hardly 7,000 odd ARN holders are converted either in their own name or the family member. So still, I would say that almost 18,000-19,000 mutual fund distributors are there whom we can tap. In addition to that, also we keep on adding the mutual fund distributor, and then we also try to cross-sell them to become the POSP. So that is one parameter which always we should look at. Second, many of the guys whom we have trained for insurance business to become the POSP, definitely initial our challenge was convincing them to start the insurance business, either in the insurance business altogether for the first time or with us, because historically we have been known for the mutual fund business. So majority of those guys who are converted to the POSP, many of them don't have the experience of dealing in insurance in past. We actually have convinced them about the benefit of the cross-selling and everything. So over a period of time, yes, I think we are able to convince them, we are able to guide them how to do the insurance business, and their productivity also increases. Second point, there was some, I would say, since we are mainly on a mutual fund side, those who were already dealing somewhere with the insurance business, probably for them, I think the proven track record of Prudent or Genex was required that, but how are you in a position to deliver the similar kind of services on insurance side also or not? Now I would say that with the decent volume, we have got a track record of around 2-3 years. Now they have experienced the service standard of their colleagues also. So yeah, I think we don't see a challenge in improving the productivity, but yes, we would love to see their complete potential come out the way they are showing in the mutual fund. But yeah, I think as and when they are getting convinced for the insurance business, we are very, very sure that the productivity of many of those guys who have started insurance for the first time will improve a lot. But I think otherwise we don't see any great movement or the change in that.
Okay. And last one from my side. So among your, top MFDs, say if we look at the top 20 or 25% of your MFDs, some color on, what would be the amount of delinquencies? So what share you have seen historically who would have moved out from your, top performing guys?
So today we have already given you in the presentation that top 10 of our distributors contribute hardly 2.5% of our AUM, and around top 50, if I take it, almost 8.5-9% of our total AUM is contributed by these guys. Please understand, obviously there could be some kind of leakage, but we have not seen the leakage on the guys who are already big. The reason being the majority of the top distributors who are already doing mutual fund business with us, their clients are on funds bazaar. So practically when their majority of the distributors are on the retail side, we hardly have any distributor in the top segment who is HNI focused. So majority of our distributors are retail focused, and almost all their businesses are happening through funds bazaar. So practically we are saying that their 300-400 clients are utilizing the funds bazaar services for the transaction purpose, for the view purpose, and for the multiple product transaction and the portfolio valuation purpose. even if my distributor hypothetically thinks of moving out, it would not be easier for him to take that call in isolation, because he has to think about 300-400 clients, account opening somewhere else, how to move the transaction, or how to move the portfolios of mutual fund to somewhere else. So it is not that easy for any distributor to move out, even if he decides. Second point, I would say that this I'm saying, if he decides, it would not be easy. But my point again would be that why would he decide to move out? Now, as we spoke earlier also, that we have got a very, very good tiered structure. That means when the distributor becomes bigger and bigger, he gets a higher share of Prudent's revenue. So obviously, he's not losing on the compensation side. Second is, last 3 years, we have added many other products. So even assuming that they are losing 2 basis point commission on the mutual fund product side, but they get to sell multiple products which otherwise they would not have the access to. So obviously they believe, or they find that by doing the cross-selling to existing set of distributors, their overall revenue has gone up. Third most important part, I would say that the kind of platform what we offer, Funds Bazaar, I think probably they also believe that it is one of the best platform. So obviously they need not to invest on the technology side. So they need not to invest on the servicing of the client side. So obviously they also understand the cost saving aspect while dealing with Prudent. So one aspect I covered is why would they move out, why they would not like to move out. And second, even if they decide to move out, it would not be that easy for them. So, yeah.
Yeah, got it, sir. Very helpful. Thank you so much, and all the best.
Thanks.
Thank you. Next question is from the line of Priyesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi, sir. Congratulations. Just firstly, if I look at your growth in SIP book from December last year to this year, while last year base would also have Karvi in December, right? But your growth in SIP book is higher than your growth in the overall equity AUM. So is it that we have been able to extract more SIPs out of the Karvi assets, and what more can we really drive the increased growth from there? That would be my first question.
Yes, it is.
Basically, if you look at our SIP book as of last year Karvi acquisition would have added around 30 to 33 crores of SIP book. So in March 22 number, around 30 plus kind of 30 to 33 crore kind of SIP book came from Karvi. So if I exclude that number, last year probably we added the net SIP book of almost 100 plus crores. This year also, I think, as Sanjay Bhai said, that we'll be ending close to 500 crores plus in this financial year. Obviously, we are hoping to get another 100 crores of addition in this financial year as well from the SIP book. So practically, when we talk about 500 or 510 crores of SIP book by March 23, the incremental compared to the March 22 would also be around 100 crores. Last year also it was around 100 crores. One point I would like to highlight here is that definitely I would say the termination ratio of Prudent is much lower compared to the industry, and that actually is helping us to increase our net SIP book. We said that the AUM growth percentage is not there. I would say the mark-to-market gain, I think, in the last 1 year is reasonably okay, reasonably subdued, I would say. That is the reason the AUM growth was not there. But otherwise, in terms of net sales growth, I think we are almost on par with what we anticipated at the beginning of the year.
Okay. And secondly, on the commission payout to your distributors, it has gone up sequentially in this quarter. Anything to read into it, or it's...
No, I think it's sequentially, so probably you should not look at sequential data, because quarter on quarter you might see some amount of movement in the numbers. So you might see some there is a 1% of variation between last quarter to this quarter, mainly because we have a tiers, we move our partners from one category to another category, and when we move from them, let's say somebody has moved from, let's say, silver to bronze or silver to let's say gold, and for that, linked to that, there is some payout which we do as an incentive for moving to another category, which happens once in a year. and that cost was there in the month of October, November, December, which was not there in previous quarter, and that's the reason that cost is about some 50-60 lakh rupees, which was there last year also. So if you look at on a 9-month basis, you will not see the impact, but on a quarter-on-quarter basis, you might see that some impact. So probably you should look at always the 9-month number for the purpose of better comparison.
Okay, great. The next question was on how are the kind of commission payouts coming on NFOs vis-a-vis the what we had seen say 6 months back or a year back when the payouts have really gone up, and so how are the NFOs commissions trending right now?
Suresh? Yes, Suresh.
Some unmute your line, please. The line for Sirish has dropped. Please stay connected while we rejoin.
Okay. Yeah, so normally, if you look at probably NFO has been not that significant contributor to the business. However, for if you look at from the point of B2B, in case of NFO, the payout from the AMC side is normally higher than what they normally give as a brokerage, and our sharing is also normally a little bit higher than the regular business. So there might be a 1 or 2 basis point margin pressure when it comes to NFO. However, NFO will not be that significant amount because I think cities will be knowing more about the exact number of mobilizations through NFO, but NFO may not be a significant part of our mobilization. And overall, there was a significant rush at the beginning of the year in the NFO, but how it has now tapered down. So the NFO collection is also not very, very significantly larger.
Okay. And for my last question,
we have Shiri sir's line reconnected to the call. Go ahead.
Unless you want to say anything on the NFO?
My line was disconnected, so I don't know. But ultimately, I think I'm assuming that it was margin pressure due to the NFO. Is my understanding right?
So Shirish, my question was...
Your voice is not coming clear. Participants, please stay connected while we rejoin Shiri sir back to the call.
Yeah.
So in the meantime, could you also throw some light on how are you seeing the redemptions coming through? Yeah, obviously your AUM has gone up and your monthly AUM, but is there a pressure on coming through in certain segments of late, like last couple of months? Has there been some increasing redemptions overall?
So probably if you look at industry as a whole and for Prudent also, I think the last quarter has been little bit tepid on the net flows, and even the lump sum money has also been reasonably slower than it used to be. So I don't want to read anything for this 1 quarter change in the number. Overall, retail sentiment is, so probably I will not be able to say anything on the categorization of a particular segment of the customer because we broadly represent pure retail. So if you look at on the net flow, I think the net flow is bit lower. So I think redemption is almost about 55 to 60% for us. For the last quarter, industry is in the range of 75 to 80%. So gross flow to redemption ratio. So that way we are reasonably better. If you look at my gross flow has came down somewhat, but my SIP is helping us significantly because, as I told you in the presentation itself, every second rupee which came in gross flow came through SIP, and that gives a strong visibility of inflow. So you are right. I think last quarter has been reasonably somewhat tepid as far as net flows are concerned. But I think I feel comfortable when the retail investors redeem at the high end of the market rather than redeeming at the lower end of the market. So that's okay.
Thank you. Suresh, I'll request you to come back in the queue. Participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Nidesh Jain from Investec Capital. Please go ahead.
Thanks for the opportunity, sir. Can you talk about the market share trends in terms of net flows, net equity flows, and net gross equity flows?
So I think both are consistently. I think we are able to maintain our market share in spite of there being a lot of noise on the what you call the direct side. So overall, if you look at, I think On the gross sales side, Prudent's market share is almost about 3.4%, and similar is the story as far as SIP book is concerned. So these are the two important numbers from the point of view of participation in the SIP book and participation in the gross flows. Both are significantly steady.
Okay, thank you. And secondly, sir, if we think from a longer term perspective, around 5 years, 6 years out, the trend towards direct mutual fund should continue to go up in our view. And as time progresses, the difference between regular plan and direct plan will become larger and larger because of the compounding effect. So how are we preparing? First of all, do you agree with this view? And if yes, how are we preparing ourselves for that eventuality?
So I think there is a scope for direct to grow. There is a scope for the active management also to grow significantly. There is a scope for distribution also to grow significantly, because industry itself is likely to move significantly in the next 1 decade. So I believe everybody will participate in this growth story. Definitely, direct is a segment which is a DIY kind of a segment, or the segment which has been advised by the RIAs, and they are charging fees to the customer. So probably people look at the difference in cost structure of direct versus regular plan without taking into consideration the probably behavioral costs which investors pay in case of DIY, or the RIA fees which they pay to the registered investment advisor. So if you take that into consideration, today I believe that India is not into that kind of expensive trade as far as distribution cost is concerned. But all said and done, what I just wanted to communicate is that we are definitely not a part of direct. Even if that segment will grow, we may not be able to address that. However, we very, very strongly believe that there is a need for advisor, and advisory segment will grow significantly as far as India's retail wealth management story is concerned. And within that, probably MFD has to align with some platform. There also we are going to play a very huge role.
But in terms of advisory, you continue to have a model of manufacturer-paid-led advisory, not a customer-led advisory, where customer pays for the advisory.
So the only issue, because they understand we have 15 lakh customers with a 56,000 crore of AUM. So average customer AUM is about 4 lakh rupees, right? So it's very difficult. You cannot collect fees from 15 lakh people. You might collect fees from 2,000, 3,000 families easily, but you cannot collect from 15 lakh. So there is no very standardized what you call the fee collection mechanism set in the industry. If that happens, then probably we might give a thought. Otherwise, in the current context, you can't go and collect the fees from 15 lakh people.
Sure, sir. Understood. Thank you, sir. Thank you. That's it from my side.
Thank you. Next question is from the line of Abhijit from Kotak Securities. Please go ahead.
Yeah, hi, good afternoon, sir. So first one is a data question. What is the share of B30 equity assets in the AUM?
So B30 would be close to about 25%, 22 to 23% probably, and industry is about 29%, right?
Okay.
So last data was about, Sirish, any idea?
So industry was around 23, industry was around 19%.
Okay.
Sorry, Prudent is at what level, sir?
Around 19.
19, okay, got it. So second one is that when you onboard MFDs, is there a rework of commission payouts with mutual funds?
Sirish?
Pardon, when we onboard the mutual fund distributor, what?
The prevailing payout ratios with mutual funds, is there any tweaking of that which happens when MFDs join your platform, or that remains intact?
No. Our negotiation with AMC.
Sir, sorry to interrupt you. Once again, your voice is not coming clear.
My issues there, sir. So can you please take this?
No, there are. Let me just address it. There are two parts of the question. One is, let's say, when certain MFD joined us, that will not have. So what Sirish is trying to say that our negotiation with AMC would be on our strength, our reach, and our what you call the distribution network, right? That is what we negotiate with them separately. So somebody joining our platform will not have a significant change. Another thing is when somebody merges assets with us on that particular assets when he is merging. At that point of time, we share everything to him because he has already created assets on his own efforts. So say, for example, tomorrow somebody comes with 5 crore and he wanted to merge his assets with Prudent. What Prudent gets is there is a defined rule in the MP which says that the my trail rate or the incoming distributor's trail rate, whichever is lower, would be given to me, and whatever I'll receive will give it to him because that's the asset which is already spent time and energy for acquiring. Then after his sharing will be or his rate would be applicable based on my prevailing rate as per the structure.
Okay, understood. Got it, sir. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Nilesh from Bank of India Mutual Fund. Please go ahead.
Yeah, hi, good afternoon, and thanks for the opportunity. Sir, I had some clarification which I wanted. So on a slide 37, when I see the net sales for the quarter, it says that 780 crore is the net sales for that particular quarter. But on the next slide, when I see the gross equity SIP flows, which comes out to be 1411 crores. So the difference is the redemption during the particular quarter?
Yeah, you are true. Absolutely true. Yeah.
So second
So
question.
last quarter, if you look at overall there was 70% of the redemption. So if you look at the 780 crore of net sales, and when I'm saying you that 1411 crore came by way of SIP, which was 51% of my gross flow. So gross flow must be 2,800 crore and net flow is 780 crore. So 780 divided by 2,400 crore, that's the redemption.
Got it. So my first question was broadly on the industry per se. There's a lot of data which is coming out on SIP being closed. So just wanted to understand what trend are we observing at Prudent?
Suresh, you want to address?
My voice. Historically, we have been following the similar trend what the industry has, but with a better number. We have seen that some kind of terminations have increased in last.
Sorry, sir, your voice is not clear. I'm unable to listen to you.
Yeah, I think there's some network issue that I am right now. Hello? Hello, can you please speak? Hello? Hello?
No, sir, the voice is still breaking.
No, sorry.
So no, I'll just address it. Okay. So what he's trying to say is that at the end of the day, we are also a part of the industry. So overall, within the industry, our discontinuation rate would be much lower than the industry. But overall, if you look at the new SIP to the discontinuation ratio, it has definitely gone up. So if I am bringing one SIP, I think the closer is about, or other way around, if I'll tell you that there is one discontinuation, we bring in two SIP, that number would be better in the previous quarters.
Okay, got it. So broadly, from this trend itself, are we able to understand going ahead your run machine, which is adding the more and more MFTs, will have to grow at a much higher pace so that the closing of the SIPs, etc., should be taken care of. So this 5,000 number of annual addition, can we see a upgrade on that number considering SIP closure, etc., have started to inch up in last few months?
So in spite of there being a closure, as we discussed about that, we grew our SIP book by almost 29% year on year, which itself is a very healthy growth rate. And we believe that if you look at a couple of slides, the people who has joined our platform in last 2 years, there are almost 50% of distributors has joined our platform. So definitely, if you look at the key parameters of our growth drivers, adding more and more mutual fund distributors is a part of our growth drivers, and bringing more and more SIP from them. So there is no dispute about that. But I believe, so these are the cyclicality in the business, right? You can't say that because 3 months has gone, some amount of redemption came in, so there will be a change in the trend. I believe the SIP book is going to be very healthy in next 3 to 5 years. And my personal view is that today industry is mobilizing 13,000 crore a month. You will see that number going to 25,000 crore in next 3 to 4 years. So I think the growth rate will be very healthy. Within that, some amount of hiccup would come. But definitely we'll continue to focus on adding more and more distributors and educating and encouraging them to do a maximum business through SIP, which is a very you can say that's the significant growth driver for us.
Okay. So one follow-up on this, last question from my side. So broadly, say today we have X number of MFDs with us, and so out of which how many would be active, and the number of MFDs which we would have added in last 1 year, say 1 year before, say in FY22, say 9-month FY23, how many of those would be active with us?
So basically, if I give you that number, whenever the 100 we add, almost 60 to 70% of them becomes active with us. Our active definition may vary every time. So for us, I think how we track our numbers, how many unique distributors have participated in particular month. So on an average, if you see, depending on the month, our number varies between 40 to 50%. That means if today we have got hypothetically 25,000 distributors, and 10,000 distributors are active, have contributed a new business in this particular month, that means 40% distributors are active in this particular month. So practically this number on the long-term average, if we see, I think ranges between 40 to 50%. So this 25,000 number becoming 35,000 number, obviously our number of distributors participating in the business in any month will increase. So, but otherwise, unique, how many of the new recruits we are able to active? I think I would say around 60 to 70% of the recruitment becomes active.
So considering this trend, say from a long-term perspective, say from a 2 to 3 year perspective, can I say our retentions can actually increase considering we have tier-based payout policy where the smaller contributor would be shared less amount? So over say 2 to 3 years, is there a scope for improving the retention ratios?
So retention ratios are good today also. So definitely with added product, as and when more and more distributors start distributing multiple products with us, automatically retention ratio improves. Second, I would say that, as you said, the tiered structure, so obviously the person becomes bigger, his share of the revenue also increases. For there also the retention ratio increases. So yeah, I think you can say that with increased engagement with Prudent, with a distributor, the retention ratio improves.
Okay, got it. Yeah, thank you so much for replying to the question.
Thank you. I request all the participants, please restrict to 2 questions per participant. The next question is from the line of Saptarshi Chatterjee from Centrum Portfolio Management Service. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. My question is again on the MFD side, that if you see quarter on quarter, there has been some reduction in MFDs. So can you please throw some light in terms of which bucket we are seeing attrition, or what explains this attrition? Because I would have expected that MFD number should have been growing every quarter.
Yes, Suresh can address, but before that, I'll just tell you one thing that in last quarter, some 928 ARN holders number would have been reduced mainly because they have not renewed their ARN with MC, and normally after the deadline, let's say 31st March was the deadline, we give them 6 months time for them to renew their ARN. So after September, about 928 to 930 people has been terminated from the system, and they will again be reactivated once they renew their ARN. So that could be one reason. Otherwise, we added about 3,400 people in these 9 months. So that is, if you look at only number to number, you might see lower addition. Otherwise, we have added 3,500. So now Suresh can take it further.
Yeah. So on the incremental side, definitely our market share in terms of new recruits is much higher. Sanjay initially said that currently around 20% of the ARN holders are registered with Prudent. But every month or every year, the new addition to the industry, I think that share definitely would be much higher. 2 reasons for us. I would say that we actively go out in the industry or the market. I would say we convince people to start the career in the mutual fund distribution. So those who are currently not in the industry, we convince them, and we get them into our fold. So that is the addition. That is because of that, the ratio is better. Second is the existing mutual fund distributors who are already dealing with the AMCs directly. That is also our market. We go tell them about our offering, and obviously because of our offering and everything, they also join us. So how many new ARN holders the industry would recruit? I think that, frankly speaking, we don't look at that number. We always try to set our numbers, and we follow that numbers in terms of addition. So irrespective whether the industry would be negative or positive, on this parameter, we always believe that we would be positive. We'll keep on adding the new ARN holders in the Prudent kitty. To just give you the one potential numbers, I would say currently in the mutual fund industry, hardly 1.1, 1.2 lakh ARN holders are there, wherein in the insurance industry, 23 lakh agents are there. So I think if we simply look at those who are selling insurance products, at least even 50% of those guys start selling mutual funds, then obviously I think the potential market could be around 5 lakh, 10 lakh distributors. Even MFI has also set a huge number focusing MFD Kare Shuru campaign. So we also believe that because of this MFI's initiative of new MFD recruitment, I think we'll one of the biggest beneficiaries of that as well. So again, coming to this point, whether the industry adds the number or reduces the number, I think we are very, very sure that our distributor number will keep on increasing every month.
Understood. Thank you. And secondly, in terms of our state-wise distribution, if you can give some exposure towards which are the like top 3-4 states for us, and what would be their contribution in the AUM?
So Maharashtra is the number one contributor for us, and followed by Gujarat. So if we add only these two particular states, our market share would be around 72%. So these are the two main contributors. The main reason, because we originated from this side. Gujarat we originated, and Maharashtra was the second state wherein we expanded. And that is where I think we would like to highlight the potential about this particular business. Many of the states we have just opened. I would say I think before a few months only we expanded our footprint in those states. So yeah, 70% of our market share comes from Gujarat and Maharashtra, followed by North and East. South still I think we are growing.
So 70% of the AUM mix you are saying coming from Maharashtra and Gujarat, right?
Yes.
Okay. And thirdly, last question is basically if you can give some understanding in terms of your customer base or your mutual fund distributor base, if you can give some number of data point in terms of traffic in your digital platforms like the policy platform or funds bazaar, how or what percentage of clients are using your digital platform, what percentage of mutual fund distributors are using your digital platform, so that we can give a fair bit of understanding on the usage of your digital platform.
So out of our mutual fund transactions, 78% of our transactions are happening through the Funds Bazaar, that is our mutual fund platform. We have got two platforms, one definitely for the mutual fund transaction from the customer's point of view, and second for the distributor, we have their separate login. I would say that more than 90% of our distributors are using our digital platform. So obviously, I think that is where I would say the biggest USP of Prudent, and that is where the association with Prudent continues. As we said that 78% of the transactions are on Funds Bazaar. Remaining 22 also I would say that it is keep on growing. So the number every month I would say that is inching up slowly and gradually. So adoption of technology, specifically post-COVID, has become very, very fast. Insurance side, yes, I think there are no dedicated portals wherein you can track or transact everything. Obviously, I think Policy World is the platform wherein you can transact.
The person you are speaking with has put.
Yeah. So Policy World is the platform wherein you can transact the insurance product, wherein we have not activated all set of insurance products. But there, yes, the execution happens on Policy World. Chirag, if you can give the exact percentage number, I think through Policy World, if that would be better.
Yeah, percentage total online transactions would be around, if you look at the number of policies, it would be around 25% of the total. So main reason, the main two reasons are that we keep on adding integration with various companies. Also, at the moment, lot of health insurance companies have undergone the version change. So even if clients want to do their online business, they have to go through insurer portal. But currently, you can say 25% NOP, fresh NOPs are being sold through our portal.
Yep.
Understood. This is very helpful. Just one last question, if I can squeeze in, is your AMC count has come down from 44 to 42. What would be the reason for that?
Merger of AMCs. L&T has got merged with HSBC.
Understood.
So it's a merger, no other reason.
Understood. Thank you. Thank you so much and all the best.
Thank you. Next question is from the line of Shubham Bhatia from Shubham Investments. Please go ahead.
Hi. First of all, congratulations on crossing the benchmark of 56,000 crores of AUM. And my question was regarding the mutual fund distributors, which were adding and which we added. So what percentage of that would be new distributors which have just empaneled with MC as compared to the distributors which are, transferring the existing AUM with Prudent?
Suresh, I haven't understood the question exactly. You wanted to say that if there is a growth in AUM, how much is the growth because of acquiring or somebody is joining the Prudent platform, and what is the organic growth of regular business which they are bringing in? That's the question?
Yes. Yes, in terms of mutual fund distributors. So how many were already distributing mutual funds that have now empaneled with Prudent as compared to new empanelers, which are first-time distributors?
I'm able to understand the question exactly.
I have not understood the
Hello,
question.
Shubham, can you hear me?
Hi. Yes, so I was asking. So,
hello, Shubham.
Yeah. Yes.
May I request you to speak through the handset, please?
Sure. Hi, am I audible now?
Yes, thank you.
Yes. So let's say if we empanel a mutual fund distributor, and let's say if we empanel 10 mutual fund distributors, out of them, how many were already distributing mutual funds but have now empaneled with Prudent and have transferred their AUM, versus how many people are the first-time mutual fund distributors, whose first-time distribution is through Prudent? So if you could, clarify on that number.
Yeah. So if we are adding around 5,000 distributors hypothetically in this financial year, I would say that mix would be almost 50-50. So 50% of the distributors we would be adding for the first time to the industry, and 50% maybe from the existing distributors, either they are active or inactive in the industry. Second point, you said that when the ARN holders get merged with Prudent, they transfer the AUM. Hardly any of them transfers the AUM. A majority of them do the business with us. Merger becomes very, very rare. So they start doing new business, but not the merger. So if you are saying that when they come from the industry, automatically the AUM of Prudent would increase. The Prudent AUM doesn't increase because they will start contributing new business. They don't transfer the existing AUM to begin with.
Okay, got it. And the next question was, we have two portals, two verticals, one for real estate and one for loans as well. But I haven't seen any, robust contribution to the total revenue. So are we aggressive on those verticals, or how are we planning to, increase those verticals?
Basically, both these products are very, very limited to few branches. So property right now we are doing only into Mumbai and Ahmedabad. The revenue contribution of this business is really very, very minuscule. Loans, we actually are trying to establish the business. I think last 1.5 years we started creating this credit basket portal. We are just experimenting on the beta version only in the Mumbai market to begin with. I think once we believe that now we can take it forward to other cities, obviously we will take it. But currently, I think there is no substantial plan to make it big on an immediate basis.
Thank you. Shubham, I'll request you to come back in the question queue for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Dipanjan Ghosh from Citi. Please go ahead.
Hi, good afternoon. Just 2 questions. First is on your insurance business. If you can share what proportion of policies have a renewal revenue attached to it. The second question from my side is, with this industry, with the distribution industry on the mutual fund side gradually consolidating, and you mentioned that your market share in incremental IFAs additions or net additions for the industry is higher than 20%. So more from a medium to long-term perspective, how does the yield negotiation with the AMCs really swing? Is the balance shifting towards larger distributors as a whole? Those were my 2 questions.
So talking about yield negotiation with incrementally more and more distributors joining Prudent, I don't see there is a great scope available with the AMCs to offer more. So I would say on the mutual fund side, the current yield what we are enjoying, or the current percentage sharing of the TER what we are enjoying, probably we believe that this is at a peak. So I don't see that any major improvement or any improvement on the yield side. So that is the yield. Your first question, I missed your first question. If you can repeat, please.
The first question is, on your POSP business, what proportion of the book or incremental policies has a renewal revenue? I mean, I understand that health insurance and some of the segments will have a renewal revenue attached to it. So what proportion of the book has a renewal revenue attached to it? And in that case, is the renewal pass-through to your POSP agent decided upfront, or is it renewed on a yearly or on a frequency basis?
Yeah. So our average revenue contribution between health and life, if you consider this way, almost 30% of our revenue comes from the health and 70% of the revenue comes from life. Both the products have got the renewal, but yes, as you said, that health product would have a higher renewal sharing, margin compared to the life insurance business. Our persistency is very, very high compared to the industry standard. As you asked that, I think, do we actually share the renewal also to the POSP? Yes, we do share the renewal portion also to the POSP. There are two models in the industry which we have seen that many of the brokers only share higher upfront and no renewal. I think we have tried to purposefully keep the reasonable sharing on the first year as well as on the renewal side, because we believe that if we keep on sharing the renewal to the POSP, their intention or their consistency in bringing the renewal would be much, much higher, and that is visible in our persistency. So give you the answer, yes, we do share the revenue on the renewal as well.
Sure. No, so my question was more on, so let's say a retail health product, let's say it comes in for the next 20, 25 years. So the renewal commission paid through, I think pass through between the manufacturer to Prudent and then to the MFD, is that decided today at the time of policy origination, or is it decided, let's say, every year as and when the rates are renegotiated with the manufacturer also?
Majority of the component is pre-decided. Some part of the component is also dependent on the year-to-year negotiation, but yeah, majority on the health insurance side is decided day one.
Got it, sir. Thank you and all the best.
Thank you. Next question is from the line of Samyak Shah from Samiksha Capital. Please go ahead.
Yes, thanks for giving this opportunity. Congratulations for a good set of numbers.
Can I request you to speak through the handset?
Yes, sure. Am I audible now?
Sir, there's a lot of echo from the background.
Hello. Now is it fine?
We can hear you, sir, but there's a lot of echo from the background.
Okay, is it better now?
Rejoin the queue, please.
Yeah, sure.
Yes, sir, may I request you to rejoin the queue, please? Thank you. Next question is from the line of Sahej Mittal from HDFC Securities. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir, you are.
Hi, good afternoon. So, firstly, so what is the risk of our IFAs moving to some of the larger distributors like NJs of the world, given that they are offering higher commissions? So, what drives the stickiness of these IFAs to Prudent? That is one. And so, I mean, I do understand that the existing IFAs maybe somehow will stick to Prudent, but what is the additional incentive for a new IFA to come to a Prudent and not to go to a NJ maybe? Yeah, that is the first question.
So both are good platforms. So obviously for a new distributor, I'm sure I think both of us would be pitching in and almost similar kind of number would be going to their platform or our platform. The biggest point I would say what we offer is the multi-product. So compared to our competition, our product basket is better. Second point, I would say that the kind of technology offering and what kind of features what we offer to our distributors, we believe that currently our features and the technology is superior to our competition. In terms of footprint, commission sharing and everything, almost we are similar. So obviously we both always try to compete in terms of adding more and more features, more and more products, making our processes simpler and better, trying to provide the best of the services. So yeah, I think we do approach of all the distributors. I think many of them would be joining us, many of them would be joining our competition. So yeah, I think competition also equally good.
Right. I mean, so expanding your product basket is something which in...
as I said, product basket and the technology, I think these 2 points, I believe that I think we are superior to them. Footprint and everything, now it's almost at par. I think before 3 years, yes, you can say that their footprint was much, much higher than Prudent's footprint. But last 3 years after our expansion, what we did every year, number of branches, number of sales manpower, as of now on these two parameters, almost we are similar. One parameter, we still they are bigger in terms of number of MFDs working with them because they came in the industry before, I think 7-8 years before than us in terms of B2B business. Because of that advantage, number of distributors currently dealing are a little higher than Prudent. But there on that parameter also we are catching up very, very fast.
Right. And on slide 27, where you have shared your SIP book, SIP flow breakup, can you also give us the vintage of these books across age cohorts, across customer age cohorts? And what percentage of your...
I think if you look at page number 27, I think on the age also we have given you that. So you are asking about the period, otherwise age-wise we have said that there is about sweet spot for SIPs about say 30% of the SIPs coming from those who are in the age bracket of 25 to 35. And that is something that, so if you look at AUM, larger AUM is with people who are above 45 years of an age. So if you look at the total AUM, about 33% and more is with people who are above 45 years. And the SIP book is more with those who are in the age bracket of 25 to 35. So new money is coming from those who are going to invest for a long period of time. Otherwise, the bulk of the assets is with those who are closer to the withdrawal stage or the retirement age.
Right. So of this two age cohorts, 45 to 60 and more than 60, I mean, what proportion of these SIPs in equity do you foresee that will lapse or get matured in the next maybe 2 to 5 years?
So I can tell you, if you look at the SIP today, more than 50% of our SIP book is perpetual in nature, and where there is a defined maturity given for the SIP, I think the average age itself is about 12 to 13 years. So I think the stoppage of SIP before the maturity is something which is very difficult for you to predict, but I believe there is a significant amount of continuity which we can foresee. I don't see major reason for abruptly large number of SIP being closed.
What I'm trying to understand is that if the customer is already at the age of 65, I mean the max he can contribute to your book is until maybe until he turns 70 or 75 tops, right? Beyond that, he'll not be continuing with his SIPs. So from that point, I'm trying to understand, given that 55% of our book is coming from customers who are more than 45 years of age. So in the next 2 to 5 years, what proportion of this book do you anticipate will fade away?
So I think if you look at it, yes, it is. So I just wanted to say that you can probably cover. So I'm just saying you the number of live SIP above 45 is about 30%, and those who are above 60 years is only 6.5%. Number of live, forget about the amount. What is important is the number of SIPs, right? So number of SIPs of those who are above 60 years is about 6% of my book. So if you assume 20 lakh SIPs, there are 1 lakh SIPs of more than 60 years old people, which may or may not continue for more than 5-6 years, probably. Otherwise, rest all the SIP can be, you can average age of about 7 to 10 years, you can easily assume. That's my understanding, because now SIP comes with a lot of comfort, and that's the best way of investing. So we do not see any abrupt changes in the investor behavior. So Sirius, you can just cover it.
At the same point you already covered, I think those who are upward of 60 years, their contribution to our SIP book is 8.75%. Even if you assume that after a certain age, once his income is not there, if they stop renewing the SIP or they don't continue the SIP, the maximum risk what you can look at is 8.75% of our SIP book.
Thank you. Sage, I'll request you to come back in the question queue for a follow-up. The next question is from the line of Varshab Shah from Envision Capital. Please go ahead.
Yes, sir. Thank you for taking my question. Have you seen any increasing investor interest for debt or fixed income products? Can that mix change going forward?
Incrementally, yes. I think the behavior of investors on the debt side, I would say, is volatile. When they see the returns on the debt side, they might come, sometimes they exit because of the bad experience like 2017-18. I think ours is a pure retail distribution model, wherein I think many of the clients are saving by way of SIPs, and then when they do SIPs, mainly it is on equity because they believe in the wealth creation. Even if you look at the breakup of the industry on the debt side, majority of the investors are non-individual, or rather I would say institutional. And within individual also, the share of HNI or the ultra HNIs is much, much higher on the total debt segment. The retail investors whose net worth is, let us assume, what the average AUM is 3, 4, 5 lakh rupees, their share on the debt side is very, very minimum on the industry side also, because they believe there are so many other options are available. If you exclude the tax arbitrage, I think that one thing which definitely debt mutual funds would attract. Retail investors are not looking at tax arbitrage in a big way, and that is where we believe that the share of Prudent on the debt side might not become that significant. But I would say last 3-4 years, many of the clients who are looking at the stable returns and not the volatility of the equity, the new category, I would say that the balance advantage category or the dynamic equity category, that is becoming popular. I would say that is somewhere in between of debt and equity. And we try to replace the debt component with this kind of category, the equity saving category or the balance advantage category. So you can say that that is where you would have seen that this category has got the maximum flows in last 3-4 years. Incrementally also we believe that retail investors might go to these categories rather than the debt category. Yeah, I think debt might remain as a short-term investment parking mechanism, but for the investment purpose, still they go to the BEF category on the debt component.
Okay, thank you. And my second question is this growth in SIP book to 478 crores. I think sometime back, maybe a year back, the average ticket size per investor was maybe 2,600, 2,700 rupees. So is this growth in SIP book happening by currently for this quarter, it's maybe around 3,200. Is it happening by increase in ticket size, or we also have, like, live customer count is also increasing at the pace it used to increase before?
So it's a great question. I would say both ways. I would say last 6-7 months, there is a conscious effort to increase the ticket size from the investor. Now, before few years, the sales pitch used to be, I think you should have the SIP. Last, I would say that 6, 7, 8 months, we changed the tone, we changed the sales language, that you should have the decent amount of SIP. So there was a phase wherein we need to go to the customer and convince them to start the SIP. And after, I think, 5-6 years of good experience, now I think rightfully we can go and ask them to increase the SIP value. Earlier, I think people used to start the SIP for any amount. Now I think there is a good trend of starting the SIPs based on some kind of goal planning or something. So that is where we are seeing the improvement in the average ticket size as well, and that still we believe that it's a conscious effort at industry side as well, and at Prudent side also, we are focusing on that. And in addition to that, yes, I think because of the new addition of the clients as well.
Thank you. Varsha will request to come back in the question queue for a follow-up question. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello. Hello.
Yeah, please.
Yeah, just I missed your net sales number guidance for FY23 and. Hello.
Yes, Arpit, go ahead.
Yeah, I missed your net sales guidance for FY23 and what is the number that you're targeting for FY24 for net sales?
It's a difficult question because I think if you have heard any of our regular communication, historically we have been saying that in the long run, our observation is that our net sales are in line with our SIP sales. Depending on the market sentiment, there could be plus or minus. Some year it will be higher than the SIP sales, and for a few years that could be lower than the SIP sales. But if I take the 10-year average, it is in line of our actually gross SIP sales plus minus few percentages. If I look at this year YTD, we have done almost 3,500 crores of net sales. Our current run rate is around 300, 350, 400 because last 2-3 months we have seen there is a drop in the net sales. So as of now, I think you can assume around 300 crores. If this kind of sentiments continue, 300 crore is the current run rate roughly. So you can see around 4,400 kind of number. Assuming there is some market correction, some kind of people coming back, less redemption, this number can improve and that can reach to our guidance number in the beginning of the year was around 5,000 crores. Next year also, since we have added the SIP book and we still will continue, the long term or the medium term net sales number could be in the range of around our SIP book. So if my SIP book is hypothetically 500 crores, then you can assume that net sales could be around 6,000 crores. But as I said, in the short term, it varies, and that so many other parameters like sentiments and the market returns also play a very, very important role.
Got it. And any data where you might have gained market share in the SIP book?
So I would say two good parameters. I think this is again a derived number based on the industry's number. I would say that historically every year we are trying to, or rather I would say we are gaining the market on the net sales side also. So that means our redemptions are lesser than the industry. So if you compare last year's net sales ratio in the industry or the net sales market share and this year also net sales market share, our number has improved. Similarly, on the SIP side also, on the book side, when we look at the book side, if our market share is growing, that is nothing but the indirect way of saying that our redemptions ratios are less compared to the industry. So on the net book side also, we are growing our market share in the industry.
Thank you, Arpit. The next question is from the line of Ahan from Trivantage Capital. Please go ahead.
Hello, good afternoon. Am I audible?
Yes.
Yeah.
Yes, I noticed that in your cash flow from operations has been quite strong for the last 3 years, and you have a very strong balance sheet. And you mentioned that around 70% of your AUM comes from Maharashtra and Gujarat, where you're very dominant. So I wanted to know if you have any plans for any acquisitions to expand your presence beyond these two states in the coming years.
So I think if you look at today, we have 121 branches, and as Sirish said that even though our significant market share comes from Gujarat and Maharashtra, currently we cover almost 21 states, and entire length and breadth of the country has been covered by physical footprint. So probably we believe that what Sirish was also trying to say, that today, in spite of we having the full scale presence in the country, 70% business comes from these two states. That means there is a huge potential for us to get the business from rest of the country, and which we believe gradually there is a strong amount of traction, the acceptance also, and people are joining also the platform, so the growth will come from those places also.
Okay, thank you. I just had one more question. I wanted to know if, since your balance sheet is so strong, if you had any plans in the coming years to return cash to shareholders, what your dividend policy was for the next 2 to 3 years, if you have any plans for that.
So the significant cash which was generated by us has been fully utilized by us for acquiring the Karvi last year. I think we continue to believe that industry will see some amount of strong consolidation, and we would love to preserve this cash at least for the next 1.5 to 2 years, and would love to scout for good opportunity, and something will definitely come on the way. If we are unable to utilize significantly this cash in next 2-3 years, then definitely we'll go to the board for designing the dividend policy or something like that.
Okay, that's very helpful. Thank you.
Thank you very much. I now hand the conference over to the management for closing comments.
Well, thank you very much. I think we could be able to address all the questions. If you have any query, you can definitely reach out to Mr. Parth, who is handling our investor relationships, or otherwise you can reach out to Equirus also. They would be ready to address all the queries. Thank you. Yeah, Roshan, go on.
Thank you very much. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.